And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Vonnie Quinn taking you through to that closing bell with a global simulcast. It starts right now. Carol Massar in the radio booth. Matt Miller in for Tim Stenovic once again here as he pulls off his glasses. And we welcome our audience.
What is he like?
All of our Bloomberg
Superman?
platforms. He is Clark Kent with just, less hair and without the cape. We love Matt Miller.
That makes you
Matt Miller,
Lane, though, right?
63.44 on the S&P 500, up 0.7%, trying to stretch back, Carol, to that record high.
Yeah, exactly. Some enthusiasm, but you dig a little bit deeper and you realize, there's about half of the S&P trending higher, half of it lower. So once again, you got to look a little bit deeper. But yeah, overall, we're up. Thank you very much, Apple.
Yeah, we're still sitting right there at 420 on the 10-year. So this continues to be interesting to me that we've seen no movement in treasuries since the big jumps that we saw in price and drops that we saw in yield on Friday. So even as you see volatility in the equity markets, you don't see it in fixed income.
And it's likely that the Section 232 investigations and their outcomes are going to be maybe the next catalyst for these types of stocks.
Yeah, and it's just to your point, though, Matt, too, it kind of feels like a bit of a tug of war, though, too. You have so many people that are trying to make a bet directionally on where yields will go, and no one really seems to know. And obviously, no one's going to know, at least until the Fed or maybe some kind of harder signal comes out of Washington.
Yeah, off to Jackson Hole, too, in September, and we'll see what happens.
Are you going to Jackson Hole, Carol Massar?
I wasn't invited. What's up with that?
Me either. Apparently, Mike McKee.
It's like literally everybody else at Bloomberg is going.
I know.
Thanks, Matt.
All right, let's walk you through the markets here. We have another day of earnings, including more than 24 companies of note scheduled to report after the bell, including Airbnb and a few others, on a day where we see the S&P rebound up 0.7% on the day, higher by about 46 points at that 63.45 level. The Dow Jones Industrial Average higher by more than 80 points, or 0.2%. The Nasdaq Composite and Nasdaq 100, those are your outperformers on the day, each up by about 1.2 to 1.3%. Transport's also higher on the day, but we did see a significant lag in the small and mid-cap space. Mid-caps down about 0.3%, and the Russell 2000 down 0.2.
Yeah, that's certainly interesting. I'm going to go back to the S&P 500, as I like to do. 240 names in the index. Vonnie gaining ground today, 263 to the downside.
Yeah, and if we look into the map of the S&P 500, you can see that we are basically green. As you said, Carol, we have got, more than half higher and some lower, but consumer discretionary is the name of the game today, up 2.5%. It does feel like when, certain companies step out, other companies step in to take over the mantle, like obviously today it's Apple, for example.
All right, you mentioned Apple, so let's go there because that is our number one gainer, for me at least, on this Wednesday. Up about 5% here in the aftermarket. We are expecting around 4:30 p.m. Wall Street time, the president to make some announcement about another $100 billion investment on domestic manufacturing by Apple. Devil's in the details. We know Apple already spending about $500 billion investing in the U.S. over the next 4 years, but we'll see what we'll get. But Apple up 5% here in today's session. Arista Networks, ANET is the ticker, up 17% here at the close. Number one gainer in the S&P 500, reporting after the close yesterday, surging to an all-time high. This company's revenue forecast for the third quarter exceeding the average analyst estimate. A bunch of analysts raising their price targets on the stock. Bloomberg Intelligence Woo Jin Ho writing today that the company's reinforces its AI networking confidence. So some real outperformance there. And Shopify up about 22% here at the close. I believe it's the top gainer in the Nasdaq 100. The company becoming the most valuable in Canada. Citigroup called the earnings results a blowout, but I know we've got some earnings right now. Romaine, what do we got?
Let's get to Lyft. The share is spiking by about 7% in the after-hours trade. The company said that in the second quarter, revenue actually came in a little bit light, $1.6 billion. The street was looking for $1.61. And on the EPS side, also a miss there. EPS at 10 cents a share. The street was looking for 27 cents. But here is their guidance going forward. The company says that for the current quarter, the third quarter, it sees gross bookings of $4.65 to $4.8 billion, and says that EBITDA should come in a range of $125 million to $145 million. I need some time to check the comparisons with analyst estimates, but you see the knee-jerk reaction in the shares right now is to the upside.
Yeah, expectations were not so high for Lyft today, particularly after Uber this morning, and I guess it's beaten those expectations.
Oh.
What's
All right,
better? Let's go to
$6 billion buyback.
let's go to Airbnb.
Not Lyft, by the way.
No.
Lyft has not approved a $6 billion buyback.
Let's go to Airbnb, and you're seeing, as Matt mentioned, yep, that's the big headline, authorizing a new $6 billion share buyback program. That stock, though, right now initially down about 2% here in the aftermarket. Let's go to the forecast for the company. It still sees about a fiscal year adjusted EBITDA margin of at least 34.5%. We'll look for some comparison. As for the second quarter revenue, $3.10 billion, a little bit better than what the street was expecting, $3.03 billion. And then second quarter adjusted EBITDA of $1.04 billion. The estimate was below that at $970.7 million. And third quarter revenue, $4 billion, sees for third quarter revenue. So again, the outlook sees third quarter revenue, Matt, $4.02 billion to $4.10 billion. The street estimate is $4.05. But again, a new $6 billion share buyback stacks up. Now it's unchanged. So investors kind of bouncing around here in the aftermarket with.
Yeah, I mean, it's only an It's only an $82 billion company. So that is an absolutely massive buyback for this company. That kind of just begs the question, do they have nothing else to do with the money, or they just have so much cash that they need to return some to shareholders? The stock has been flat on the year.
Yeah, and it's a good point, too, particularly at a time where we see so many companies taking that cash and reinvesting it back into the company, that big boost in CapEx spending amongst a lot of the tech companies. But I do just want to point out, this is a company that was also making a big bet on experiences, the idea that they want you to do more than just book a room. They actually want you to hang out, go backstage at concerts. They had a big partnership recently with Lollapalooza. And I was trying to look for a breakout of whether they had actually disclosed what they make specifically off that business. It's not really clear that they do that, but you did see an interesting bump up in gross bookings of about 11% to that $23.5 billion level, which was significantly higher than street estimates.
And today really is the day for gig economy companies. We're going to be waiting on DoorDash as well, and others. But if you look at Lyft shares, they have absolutely reversed now and are down more than 9%. So while, at first glance, some of these metrics beat, there was definitely some negative news in the Lyft earnings. It's not really reflecting well when it comes to, Uber and its Waymo partnership and so on Lyft.
Speaking of DoorDash, they're out with their earnings, a beat on the bottom line. EPS coming in at 65 cents a share. The street was looking for 45 cents a share. Revenue also beating $3.28 billion. The street was looking for 3.17. And here is your forecast, the guidance for the third quarter. The company sees marketplace gross value of $24.2 to $24.7 billion. That is above the average estimates of what the street was looking for. And it also sees adjusted EBITDA for the current quarter of $680 to $780. It's a pretty wide range, but we should point out that the average of analyst estimates is in the middle of that range at about $720. So a beat pretty much on both the top and bottom line for the quarter, and the guidance going forward also above street estimates.
All right, we just had a small cap, mid cap investor who likes Elf Beauty, and they are reporting their earnings, and we're seeing that stock. We'll bring it up in just a moment. Adjusted EPS, 89 cents a share, folks. That was about 6 cents better than what the street was expecting. Net sales, $353.7 million. That's pretty much in line with what the street was expecting. The estimate was $353.5 million. And then adjusted EBITDA, $87.1 million. That is above what the street was looking for, $74.3 million. We are seeing the stock, though, down about 1.4% here in the aftermarket.
All right, I've got Zillow here, and so far just out with revenue in the second quarter. Rentals revenue was in line with estimates at 159 million even, I should say, compared to an estimate of 159.7 million. Mortgages revenue was higher at 48 million compared to 44.5 million. That's interesting. And residential revenue was higher at 434 million compared to an estimate of 429 million. The chief executive officer, Jeremy Waxman, says the results reflect how the power of their strategy and the strength of their execution are fueling growth across the company. But will be interesting to see if they earn money.
Just a brief word on TKO, because we saw that $1.6 billion deal from ESPN and Disney, obviously, for the WWE rights. It beat as well on the bottom line and on the top line. The UFC revenue was a tiny bit light, but everything else, including WWE, beat.
Let's check in on Bumble, the dating app coming out with their earnings right now. It looks like a beat on the top and bottom line with EBITDA coming in at right around $95 million and paying users now at about 3.78 million, though we should point out that does appear to be a miss. The street on average is looking for paid users of 3.96 million, but revenue did come in above estimates at 248 million, higher than street estimates of 244, and the company also saying that it has found a new CFO. His name, Kevin Cook, the interim CFO, is going to step down from that role as now we get a clearer picture of what the management looks like for Bumble going forward. A modest increase in the shares in the after hours trade.
Yeah, Bumble up about 6%. Just a real quick line. I want to go back to Elle for a moment. The company is not providing a full year fiscal 2026 financial outlook, and it cites potential outcomes related to tariffs. So we're starting to slowly get the impact when it comes to tariffs. Now I'm going to go to Duolingo because, man, this stock initially just soaring in the aftermarket. Let's get to it. And in terms of the outlook, third quarter adjusted EBITDA, it sees 69.4 million to 73.1 million. And the estimate on the street, that was 70.5 million. Sees fiscal year revenue 1.01 billion to 1.02. It had seen 987 million to 996 billion. So it's upping up that number. Also sees third quarter bookings of 268.5 million to 272.5 million. That too seems like it is raising its expectations above what the street's expecting. Go back to the second quarter, EPS for the second quarter, 91 cents, easily beating the street estimate of 68 cents a share. And second quarter revenue, that too was a beat, 252.3 million versus the $240.6 million estimate. The stock is up, folks, 24% here in the aftermarket.
Yeah, absolutely. One of the biggest movers in the aftermarket. Another big mover is a company called Remitly. This is a wire transfer company that's primarily based online. The street was coming into this quarter expecting the company to post a loss. It actually posted net income of 6.5 million in the most recent quarter, revenue of about 412 million. That was also a beat. And for the full year, the company says look for 1.61 to 1.62 billion dollars in total revenue, higher than its previous guidance, which was around 1.57 billion dollars. Similar story when it comes to EBITDA, raising its guidance there as well. And I should point out, we're going to have the CEO of Remitly on the program a little bit later this hour.
Exactly. And we're also going to be having the CEO of Informatica, which also just reported now revenue was definitely a beat, $407.3 million. Adjusted EPS, though, a slight bit light, 18 cents versus the 20 cent estimate. We'll ask the CEO why.
I got Fortinet, which is really a $75 billion internet security company, coming out with billings that were much higher than had been anticipated. The street was looking for 7.2 to 7.4 billion for the full year. Fortinet says there'll be 7.33 to almost $7.5 billion, and as a result, those shares jumped. They beat on second quarter EPS at 64 cents versus 59 cents. They have a higher adjusted EPS expectation than the street. They're saying, well, 62 cents to 64, and the street was only looking for 62, and a range looks the same in terms of revenue for the third quarter and full year, at least as good as or better than the street was looking for.
All right, just a few earnings after the closing bell. On to Apple. We'll wait for the president's news on that, expected around 4:30 p.m. Wall Street time.